Good morning, traders. Today is Saturday, October 7th. We had another very good week. We're going to get right on into it, show you how each day went, show you how each day's predicted pattern went, and then we're going to get into the big question. Did we bottom? I say yes, we have. And I'm going to actually show you a lot of details on that towards the latter end of today's presentation. And I'm also going to show you one of market makers' algorithms' secrets. It's in the gaps, guys. It's in the gaps. You're going to be stunned when you see what I'm about to show you. Okay? So here we go. Let's kick off with Monday, October 2nd. This is the predicted pattern in pre-market. I sent it out 2 minutes before opening bell. Up, down, and then a little bit up. How'd that go? Up, down, and then actually that was a little bit more than just a little bit up, but yeah, basically the pattern worked. And on the up move here, got 10.558% profit. On the down move, 71.79% profit. Good stuff. October 3rd, Tuesday, down, up. How'd that work? Down, up. Okay, so that's good stuff there too. And on the down move, I got 48.49%. Okay. Let's go over to, this would have been Wednesday, October 4th. Down, up. Okay. How'd it go? Down, up, down, up. This dip, if you take it out, obviously it's up. But this dip, I went back and looked how, where in the pattern that I was looking at in pre-market, and I think I figured it out. I mean, I was predicting more of a stair step, up, up, down, up, but instead it went up, down, up. Okay, so I think I figured it out. What I saw in the pattern, it was kind of tricky. But nonetheless, overall was correct. I said down, up. It went down, and then it went really up, okay, on Wednesday, the 4th, October 4th. 34.78% down on my puts, okay? So, next day, Thursday, October 5th, down, and then up. How'd that go? Down, and then big up, okay? You're going to see a trend. You're seeing these trends that the upside is bigger than I anticipated. Yeah. That's a hint, guys. This is on Thursday. You all know what happened on Friday, don't you? Okay, so and nonetheless, got out of puts for 54% on Thursday on the down move. Okay, this is Friday, October 6th, 7:07 a.m. This is before non-farm payrolls and unemployment came out, guys. About, just over 20 minutes before. Okay, I'm Central Time, so that's 7:07 a.m. That would have been 8:07 a.m. Eastern Time. 23 minutes before non-farm payrolls came out, I tweeted, hey, the butcher's going to be opening up a sinkhole today. Okay. 23 minutes later, we all know these numbers came out. And then when the numbers came out, that's what happened. Kaboom. Okay, so let this be factual evidence that I had no clue whatsoever what the non-farm payrolls or the unemployment number was going to be. I had no care in the world what that number was going to be. Because regardless of what the number that came out was, the market maker was going to sinkhole it. And that's exactly what they did. That is evidence, irrefutable evidence, that my own opinion of what the non-farm payrolls number or the unemployment number is going to be doesn't mean squat. It doesn't mean squat. Therefore, if my opinion doesn't mean squat, your opinion doesn't mean squat either, because the market maker doesn't care what the non-farm payrolls number is going to be. The market maker was going to tank it no matter what. That is evidence right there. And I want to show you this. I have been tweeting this since July. Actually, 2 days after the July 27th all-time high. We lied to you news. Look at everything on this screen. Earnings, misinformation, economic data. Economic data, non-farm payrolls yesterday. If the number was so good, unemployment numbers, right? It was so good, then why did the market maker sinkhole it? I'll tell you why. Because that was the bottom that the market maker sinkholed to. Okay? So, we're going to get into that in a minute too. I'm going to prove it. So, there you go. Do not pay attention to anything you hear from the media, from the internet, from seekingalpha.com. I ride on those guys pretty hard on Twitter, by the way. I won't show that tweet this time. But whatever, the media, CNBC, I don't care. Bloomberg, it's all fake. It's all BS. And I just proved it Friday morning when I called out the sinkhole before it happened. And I had no clue, and I have no care what the non-farm payrolls was going to be. I only care what the market maker is going to do about it. Because that question puts me on the right side of the trade. If I can figure out what the market maker is going to do about it. Not what I think the non-farm payrolls should be in order for the markets to go up or down. Who cares? Who cares? Okay? So, what do we got here? Oh, yeah. Ah, yes. Okay. This is Friday. So, I predicted chop in the beginning, up, but then down. We're going to get into this down move because the market maker did finally get me on those puts. I was shorting it. And then when I kept seeing it kept kind of grinding up, I quit shorting it. Okay, so the market maker got me on my puts on yesterday because I thought it was going to go down. But I'm going to show you some trickery that I've actually previously tweeted on in the summertime. Okay? So, anyways, so I predicted a grind up and then down. We all know what happened. It did grind in the beginning. Remember that? Grind down, grind down. Up. But here's where I predicted it would go down. But instead, what happened? It kept going up. Okay? It kept going up. I was like, what the? Alright. This is why it kept going up. Anyways, oh yeah, this is when I initially got calls. Because actually I predicted it was going to grind down and then go up, but then it was going to go down. So on the up move, I got 33.85 on the up move. Okay, but I got roasted on my puts. I said, oh man, get out of that. Okay, so yeah, here we go. My puts got roasted today. All right, now, okay. See this wick up? This was in extended hours after close, guys. Yeah. You see this wick up? Yeah. This is all in extended hours. This is how the market makers cheat. This is how the market makers avoid having to retrace intraday. They can just wick up in extended hours and negate having to retrace intraday. You follow me? Yeah, let that sink in for a second. So, the pattern that I saw in pre-markets where I said, oh, it's going to go down. Apparently, see, this is where I need to kind of refine my... It did actually wick up eventually, but in extended hours. So it kept it up there all day. And in extended hours, it wicked down all the way down here. And it was this wick down that I saw in the pattern. But little did I know it would happen in extended hours. I saw it happening intraday. That's what happened. That's what happened. Yeah, I predicted the pattern would go right down to right about here. I predicted the pattern would go down and make a higher low right there. See, and that's what happened. Okay, if you don't believe me, August 29th tweet where I talk about pre-market wicks. Look at the circles. August. Yeah, wick up, wick up, wick up. Well, this is during intraday. Extended hours. This is also in extended hours at the end of the day. See that? Same thing like happened on Friday, but this is back in August, guys. Look at that. Okay? That's how the market makers cheat. So, it's like I was partially right. The market maker was going to take it down. But the correct answer yesterday was it was going to wick down in extended hours. That was the correct answer. Just like it did back in August. Here's August 29th. See? Just like it did here. Here. See? You know, you take it up, and close the high, close the session highs, and then wick down. Well, actually, it's considered a wick up. But wick all the way down to here, and then take it back up. That's how they cheat, guys. Okay, you got to be aware of that. All right, so. All right, guys. This is going to lead me to my session 421.22. I was calling that out all week, guys. All week. Look at this. Friday, Thursday, Wednesday, Tuesday. Bounce, rip. Touch, rip. Touch, rip. Every time it touches 421.22, it rips. Why? Why? 421.22 is the August 19th, 2022, not 21. I think that's a typo. It wasn't 2021. It was 2022. 2022. 421.22 is the August 19th, 2022 gap down. The market maker targets gaps as pivot points. It does not necessarily target the most recent gap. It will target gaps from previous years. You follow me? From previous years. And I'm going to show this to you in a moment. Okay? So, let me make sure. Okay. August 13th, 2022. This is the pattern. The hive, guys. This is the hive. And this is August 6th. That's the pattern. Huge sinkhole. Rip it back up. Huge sinkhole. Rip it back up. And, as you just saw on the previous slide, 421.22. It hit that gap all week. And now it finally explosively ripped up. And by the way, what I do see on Monday is a potential gap up and then an additional pump up with probably a dip, then rip. I'm sorry, not Monday, it's Tuesday. Monday's a holiday. Tuesday. I see a possible gap up on Tuesday, a dip, then rip. Yeah, guys. Okay, so here we go. I'm timestamping this tweet that I sent out yesterday. Since Monday, September 18th, I have predicted pre-market patterns every day for 3 weeks. Now, it has been 3 full weeks. None of them had unique pre-market patterns like today, aka the sinkhole. The strength of the move was similar to October 13th, 2022. Sinkhole down and then rip it up. I'm therefore claiming Wednesday, October 4th, the middle of this week, is the bottom. Now, let's get into a couple of the secrets. For the market maker, I'm going to prove this to you. You're going to see it unequivocally in a moment. The market maker's targets are never face-up items, such as daily, weekly, monthly wicks. People want to look at like 200-day moving averages. No. I'll tell you right now, no. You can say, well, yeah, but it was hit on I think it was yesterday or Wednesday. I think I heard somebody say, oh, the 200-day was hit. No. I'm going to prove to you unequivocally. The 200-day moving average happened to coincide with a gap. Market maker is targeting gaps as major pivot points. Okay, I want to be perfectly clear. The market maker is targeting negative spaces. The negative space is the gap. You can't just see that face up, right? When you look at a chart, unless it's just obvious, with like, or it's right in your face, that gap is so big you can see it. But you can't see small gaps face up. The market maker is targeting gaps from previous years, not just the most recent gap. All right? So, May 26th, I've retweeted this several times. I don't remember. I don't think I've put it on my YouTube videos until now. But I started asking the question, why? Why did the market maker pivot here? For example, March 13. Why did the market maker pivot right there as the low? Why right there? That is the question you should start to ask yourself if you want to try to understand the market maker's algorithm. Do not ask yourself what. You need to ask yourself why. What will not answer the question. What is simply, well, looks like March 13th was the low. That's the what. Why? Why was that the low? Why did you pivot there? Why was the June 15th, June 16th, the summertime, why was that the high? The temporary high, right? We went higher than that, obviously. Why was the June 15th? Why did it stop right there at that point and then it retraced? That's the questions you need to start asking yourself if you want to understand the market maker's algorithms. And I will tell you something right now. There is not a single indicator in the market that will answer the question why. And I'm talking about Elliott wave. I'm talking about DeMark counts. I'm even talking about the MACD and RSI that I use. There is not a single indicator to tell you why. Not one. Because it doesn't not only does it not exist, it's because the market maker is not targeting anything that you can visually see on the chart. The market maker is targeting the negative spaces, and they are targeting data points from different exchanges. That's why none of the indicators you are using today will ever get you ahead. I've tweeted this, but I don't have the tweet right now. It's just exactly like you and I, well, maybe you guys now because I figured out the algorithm. You guys are playing chess on a single chessboard, but the market maker is playing multi-dimensional chess on multiple chessboards. And they're taking the rook from one chessboard up higher and taking it down to take out your bishop on your chessboard. Do you see now? Yeah, that's exactly the best analogy I can give, the way the market maker is playing this game. Okay? So, now, okay. Let me show you now evidence of gaps. Okay. Let's first start with let's go with January. Let's just start with January. Okay. Here's January. See this chop? Chop, 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 boop. Well, guess what, guys? There's a gap right here. There's a gap right here. Okay? Now, let's go back to June 10th. June 13th. There's a gap right here too. Okay? Gap here. Gap here. All right? Okay, no more gaps over there. Now, so this is January. I want you to note the market maker is targeting gaps as pivot points. Look at this low. Look at this wick up right here. See this low right here? See this low right here? Why did it wick and stop right there? Look closely. There's a gap right here. Okay, so what you currently understand about gaps is this, and it's partially true, that okay. When remember this December 14th to December 15th. Remember this gap down? Right. See this gap down? We eventually filled the gap over here, right? In January, right? Mid-January-ish. Okay, so that makes sense. That makes sense that, oh, well, you filled the gap. That's true, but it's only partially true. But guess what? Market maker will reuse this gap again for the future. Okay? So, it reuses the gap again in, look at February 24th, right here. So here's the gap, right here. See that? Here's the gap. It uses it as a pivot point to bounce and then come down. You see that? Okay, got it? Get it? Got it? Good. All right. So I'm going to show you some more examples. Now, let's go towards, March 13th. March 13th low. Here. It's the same idea. Here's the line of the March 13th low. Here's a gap up. Basically, here we go, right here. Here's March 13th. Here's the gap up. It's basically the market maker filling the gap again. It's filling the gap again, even though it technically filled the gap the first time. So 99%, probably 99.99% of the traders just put it out of mind. Oh, we filled the gap. We're good now. Oh no. Market maker's coming back for it. And that's exactly what the market maker did. It filled this gap that 99.999% of the traders forgotten about it already, because we already filled it, remember? Oh no, market maker's coming back for it. Okay, so watch this. I'm going to pick on, okay, you see this? This is back in April 26th and May 4th. Yeah, April 26th. Here's this low. May 4th. See this kind of yellowish dotted line? That's from 2022 and 2021, guys. Okay? Watch this. So, kind of zoom out. Here's the same yellowish dotted line. Let's go all the way. Let's follow the line. Aha! Gap. There's a gap. Right there. Plain as day. There's a gap right there. Okay? So, every major pivot point aligns with a gap. Here, let me show you another one. So I just showed you this, the dotted line. Here, let's take a look at this one. Okay, so what do we got here? May 24th. This is a solid yellow line. Let's go over here and check it out. Oh, there's a gap right there, isn't there? You bet there is. Okay? See? So, there you go. I'm showing you. It's irrefutable, guys. Every single one of these lines that I've drawn. Now. Yep. Okay, so. This red line, what's this red line here? This is a gap. Okay, this is a gap up. This yellow line, 422, yeah, 422.21. Sorry, the 422.21 is the August 19th, 2022 gap. Technically, this should be orange. This should be, yeah, here we go. And this actually should be red. There. Red just means for 2023. Orange yellow means not 2023. It could be 2022. It could be 2021. Okay? So, guys, we found the gaps. And remember what... Okay, see? Check this out. I found an uncanny pattern. Like in January. Fill the gap. You fill the gap down here, January. Chop, 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 boom. Okay? Anytime you're coming up on these lines, chop, 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 boom. What happened, guys? What just happened? This week. Chop, 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 boom. It's gonna do it, guys. We didn't have anything like that. Look at that. Tell me what kind of chop, 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 boom you've had since July 27th until now. We haven't. It's because it found the gap that it was targeting all along. That's why I believe we have bottomed. We're now showing the pattern of, that I just showed you earlier also, of, holy smacks. This looks like October 13th, 2022. All right? Now, aha. Let me show you guys something else here. Is this this low, oh, where are you? Yeah, 433.01. All right, check it out, guys. Check it out. Do I not have? Okay. I don't have a line there. This is the temporary low. Friday, August 18th low. 433.01. Remember, right here. I've got my circle on it. Got my cursor on it. Look left. Gap. It found a temporary low here at the first gap. It found the actual low here at the second gap. Yeah. This is the real deal. Okay, watch this. See this low right here? This is the June 26th low. Remember, this was the June 15th peak? All right, let's do that. Let's just do this exercise. June 15th peak. Right here. See that yellowish dotted line? Let's get on to it. That lines up with February 15th, 2022. Where are you? Is it that one? Hold on. Yeah, it better be. Okay, so here's the gap. There's a gap right here. Here's the gap. Right there. So, June 15th went up, filled the gap, and then retraced for a week. Does that make sense now? That gap is on February 15th, 2022. All right, so check that out. Check it out. Okay, that was the June 15th high. What about here? June 26th low. There's no gap right here. That's okay. Let's go over to, let's slide over the, here, let's just slide. Wait, is there a gap there? No, that's no gap there. See if I can find something there. There has to be a gap. 433.80. There. I didn't circle it. I need to though. It's right here. March 3rd, 2022. There's the gap. There's just so many gaps. I didn't circle them all, but I should have. It's right here. It's right here. Here's the gap. So therefore, that filled the gap, and now it's going back up. Okay? So, you guys, irrefutable evidence. I showed you pivot points for here, for there, for there, for there, for 2122, for here, for here, for the March 13th low, for the January low. Why don't we look at the hive, guys? What do you guys say? October 13th, 2022. What do you guys think? October 13th, 2022. SPY 348.11. What do you guys think? What do you guys think? Oh, why did you pick 348.11? Why in the world would you pick 348.11? Oh, well, let's look over here, shall we? Because on October 12th, 2020, it was a gap up. And actually, I can see another gap right here, too. And actually, I can see another gap right here, too. Okay, so, yeah. This is mind-blowing stuff, guys. All the stuff that 99.99% of YouTubers and Twitter gurus are tracking to aren't what the market maker is tracking to. I just showed you right there, irrefutable. It has nothing to do with 200-day moving averages. It has to do with the negative space, the gaps. All right? Now, you're thinking, holy smacks, I can't sit there and see all these damn gaps in the whole chart. Okay, that's fine. What I have here is an Excel spreadsheet that I did that, it actually calculates the gaps up and the gaps down. I have it through yesterday. I just downloaded the data. You know, you and I can download the data easily from a lot of different sources. But I put in an Excel formula right here, column F, column G. So here's the formula for gap up. I'll double click on it so you can see it. D3 minus C4. Okay? That's the gap up formula. D3 minus C2 is the gap down formula. Okay? So I'll let you kind of reason through it. I don't want to explain too much. Now, and then I use Excel here, conditional formatting, highlight anything that is greater than 0. Anything greater than 0. That's what gives you, because if it's a positive number, the absolute, if it's a positive number in either column, that means it's a gap. Okay? It's a gap. So, 9.5, right? It was a gap down. And I checked this. 8.1, it was a gap down. Yeah. Now, if you want to quickly see, well, I just want to know in all of 2023, how many gap ups did we have? You can go up to this gap up and you can filter. filter by color, filter only the pink. There you have it. These are all your gap ups. Okay? Or in the reverse, say, you know what, I just want to know. I want to know how many gap down we have. Filter by color. Gaps down. Why are you doing all this? Now you can actually predict ahead of time where the market maker is going to make major pivot points on the gaps ups and the gaps downs. Okay? Now, if you don't want to do all this work, feel free to email me at agent000@gmail.com and I'll just email this to you. This didn't take me long to put together. And moving forward, all you got to do is just, enter your own data right here. And then it will calculate this for you. Okay? So, email me if you are don't feel like messing with Excel. I'll be more than happy to email this back to you. Okay? So, that's what I wanted to show you guys. All right? It's targeting gaps, and I think we have found for 21-22, August 19, 2022 gap, and we have bottomed. And the up move now begins. All right, follow me on Twitter if you want to get real-time tweets and now intraday predictions. Don't forget to listen to your favorite music while you're trading. It helps you get in the right state of mind, right flow state. Please give this video a like, share, subscribe, or click to be notified when I release something new. With that, I'm Agent 000, signing off.